You've heard the name Warren Buffett, right? He's pretty much the world's greatest investor. A guy who took a small, failing company and turned it into an absolute empire. But here's the thing. He didn't do it with some crazy, complex algorithm or by taking wild risks. He did it with a set of principles that are, well, timeless. So let's dive in and break down the playbook of the Oracle of Omaha.
And this quote, it just nails it. This is the perfect place to start because it gets right to the heart of what we're going to talk about. In his world, things like temperament and patience, they aren't just nice to have. They're your secret weapon, your ultimate competitive advantage. This one idea is the key to his entire philosophy.
So here's what we're going to cover. First, we'll look at where he came from. Then we'll unpack the powerful mindset that really drives all of his decisions. After that, we'll get into the nitty-gritty of his investment strategy, see how he actually used it to build his legendary company, and then, at the end, we'll boil it all down into a blueprint you can actually use.
So you gotta wonder, right? How does a kid from Omaha, Nebraska end up becoming this global investing icon? Well, it definitely wasn't an accident. It started really early with this deep fascination for how business and money actually work.
In this timeline, it just shows you this wasn't some late-in-life hobby. He bought his first stock when he was just 11 years old and was filing his own taxes at 14. But the real game changer, the turning point, was when he discovered his mentor, a guy named Benjamin Graham. Graham's ideas literally became the foundation for his entire life's work.
All right, let's get into section 2 because this is where things get really interesting. You see, Buffett's real secret, it's not some crazy formula. It's his mental framework. It's a completely different way of thinking about money, about the markets, and about time itself. Honestly, this is way more important than any single stock he ever picked. Think of it like this. There are 4 main pillars to his whole mindset. First, he thinks in decades, not days. He completely ignores the daily chatter. Second, and this is huge, you're not just buying a stock ticker that zips across the screen. You're buying a piece of an actual, living, breathing business. Third, you have to control your emotions. And fourth, always remember that price is what you pay, but value is what you get. He never, ever confuses those two.
And this quote? This is probably his most famous one, and for good reason. It perfectly sums up how he deals with market craziness. When everyone else is giddy and chasing the next big thing, that's when Buffett gets nervous. But when the market is tanking and there's fear everywhere, he sees that as a massive opportunity. For him, chaos is where you find the bargains.
And look, if you need one single piece of proof that this long-term thing actually works, here it is. An incredible 90% of his wealth was made after his 60th birthday. This is the magic of compounding in action. It's like a snowball rolling downhill. It starts small, but by the end, it's an absolute avalanche. His real superpower wasn't just being smart, it was time.
Okay, so we've got the mindset down. But how does he actually do it? What are the rules he follows when he decides to buy something? Let's get into his playbook. This is where the strategy comes to life.
First things first, we have to get this straight. Buffett is an investor, not a speculator, and those are 2 totally different things. An investor cares about the real value of the business and asks, what is this thing actually worth? A speculator just cares about the price and asks, can I sell this to someone else for more money soon? They're playing 2 completely different games.
So how does he spot these amazing businesses? He looks for something he calls an economic moat. Just like a moat protects a castle from invaders, an economic moat is some kind of durable competitive advantage that protects a company's profits from its competitors year after year. And here are some classic examples right from his portfolio. For Coca-Cola, the moat is its brand. It's recognized literally everywhere on the planet. For Apple, it's that incredibly powerful and sticky ecosystem. And for American Express, it's all about trust and the power of its network. These are advantages that are incredibly hard to copy. And to round out the playbook, here are a few more core rules he lives by. First, his circle of competence. Basically, if he can't understand a business easily, he just doesn't touch it. Then there's the margin of safety. This is how he minimizes risk. If he calculates a business is worth $1, he'll only buy it if he can get it for, say, 70 cents. And his favorite time to hold a stock? Forever. I mean, that says it all, right? Okay, so we've got the mindset. We've got the playbook. Now let's see how he put it all together to build one of the biggest, most valuable companies in the world. This is the story of Berkshire Hathaway. Believe it or not, the story of Berkshire Hathaway starts with a total failure. It was a dying textile mill that was going nowhere.
But Buffett saw it not as a business, but as a vehicle. He took the cash from the dying textile operations and started using it to buy wonderful businesses, one by one, slowly turning it into the global powerhouse we know today.
But that raises a big question. Especially early on, where did he get all the cash to buy these great companies? Well, he had this totally brilliant, kind of secret weapon that fueled Berkshire's growth.
His secret weapon was insurance float. Think about your car insurance. You pay the company your premium every month, right? But you might not have an accident for years, if ever. That giant pool of money that the insurance company holds on to from all its customers, that's the float. Buffett realized he could buy insurance companies and use that massive pile of cash to invest for Berkshire's benefit. It was basically like getting a giant interest-free loan from his customers. Absolutely genius.
All right, we've gone through his history, his mindset, his strategy. So what does this all mean for you? Let's boil it all down into a simple blueprint with lessons that you can actually use today.
First up, it all starts with your mindset. You got to commit to the long haul. That means no day trading, no chasing hype. You have to keep your emotions in check. Your best friends in this game are time and consistency. If you master those, you let the incredible power of compounding do all the heavy lifting for you.
And when you're ready to actually look at investments, here's a simple checklist. Ask yourself, do I really understand this business? Does it have a strong, durable moat to protect it from competition? And finally, is it selling for a fair price? If you can answer yes to all three, you're on the right track.
And at the end of the day, when you look at what really matters, it's not about being a math whiz or having some complicated spreadsheet. Success really comes down to these three things: patience, discipline, and rationality. It's all about your character, not your IQ. And this really is the key takeaway. Understanding Buffett's ideas, that's the easy part. The hard part, the part that makes Buffett, well, Buffett, is having the discipline and the emotional control to actually stick with it, year after year, through good times and bad. I want to leave you with one last quote from him because it just wraps everything up so perfectly. Building wealth is just like planting a tree. It doesn't happen overnight. It takes time, it takes patience, and it takes doing something today for a reward you might not see for a long, long time. So that really leaves us with one final thought. The single most powerful tool in Warren Buffett's entire playbook, patience, is completely free. It's available to every single one of us. So the only question left is, how are you going to invest yours?